Hey everyone, in today's episode I'm going to discuss something a little bit different, but it's going to be the Australian house prices in 2043 and beyond. So it's an interesting topic because people always say, and they have since, probably for the last 100 years, where are prices going and what's going to be the future of house prices. So in today's episode I'm going to discuss a few things. First of all, the history of house prices. Secondly, where house prices are today. Thirdly, what drives price growth, and then finally, prices in 2043 and beyond. And I'll give everyone a word of warning, these numbers are going to be insane. Not everyone's going to like seeing it, but if the things continue how they are, this is what it will be. Let's look at the history of house prices. So, look, this is just a graph showing basically where our house prices are today. And it's basically from 1970. And the reason I'll show you this graph is because from 1970 onwards, something happened that changed the course of history, and it probably won't be reversed, to be honest. And that is the dollar was taken off the gold standard. I've mentioned it before, but I'll mention it again. So what basically happened there was President Nixon took the dollar off the gold standard. The dollar used to be relative to the actual gold price, but it's not anymore. So basically what happened then was the dollar was kind of more finite because it was relevant to the gold standard, whereas now, well, since the early 70s, what's kind of happened here is asset prices and income growth doesn't correlate whatsoever because all the money goes into hard assets, and it's mostly because of the increase in credit as well. So you can see all the recessions that have happened, the little blips and all that kind of thing, and generally the cash rate going right down, which is what's happening, and it's going to continue to happen because of what's going on. But that's what's happened to house prices. So you can see Sydney and Melbourne well out in the lead. Melbourne, funny enough, did start well below Sydney, but it's obviously not too far beyond that. Obviously now Brisbane has caught up, Adelaide has as well, and Perth too. But really in terms of a median house price, Melbourne is still second to Sydney, and it's definitely going to do well in the future. So that's the history of house prices in terms of where we are. You can also see the inflation rate there. So, apart from the 70s where we had awful inflation, it's been pretty relative to the cash rate there anyway. So that's the history of house prices anyway. Look, where prices are today is interesting because they're very expensive. So you can see here, just go chronologically down the order. Sydney, 1.662 million. Melbourne, 1,068,000. Brisbane, 976,000. Adelaide, 929,000. Melbourne, 1,041,000. Perth, 852,000. Hobart, 686,000. Darwin, 585, and combined capital is 1,154 million. Now, the combined capitals there, it's mainly because of Sydney, Melbourne, and Brisbane really prices pushing everything up. I think it's something more than 70% of the population lives in those three capital cities. So that's a large reason for why the combined capitals is that. But that's where all the prices are today in terms of, real estate and house prices in each major city. Let's get into what drives growth in the property market really, and that's fundamentally the thing is it's money supply that's really done it. So this is just a graph of money supply. Mind you, this is the US chart, but I'll tell you right now, the Australian is probably similar, if not even worse, this because we have lower interest rates and we tend to just print money like a madman, literally. So you'll see here, obviously, post World War II, we had quite a bit of printing of dollar, and that's because obviously the debt we had, but it was fairly relative until about the 1970s. But then when gold was taken off the dollar was taken off the gold standard, you can see here just what happened, and it's just gone exponentially up, and that number until 2025 has got even worse, mind you. And if we continue to get a stock market going like it is, we're probably going to get even more dollars printed. So what happens here really is it's just crazy what's going on. So that's going to continue to happen, unfortunately, but that's what's really driving a lot of price growth in terms of assets because of money supply. Another thing here is immigration. Now, it's one of my most annoying and favourite topics to talk about in Australian real estate. When you're in the midst of a housing crisis and you're 350,000 dwellings short or so, it wouldn't be a good idea to bring in like hundreds and hundreds of thousands of immigrants, would it? But that's exactly what our country tends to do. Now, at the moment, so this is just off Matusik data, which is very accurate, and this is actual population growth. This isn't immigration statistics. This is population growth. So we actually have a net negative in terms of birth rate, right? Because it's only at 1.7 when it should be 2.1. But realistically speaking, this population growth is almost entirely literally from overseas migration. That's where it really comes from. So what's kind of happening is we're bringing in like 500 plus thousand people a year, and it's creating a population just going through the roof. And you look at any future projection chart, and this is even out of government websites, you'll see Australia hitting 30, 40, 50 million over the next 100 or so years. It's just crazy population growth, and really needs to be brought in. But if you look on the right-hand column here, you'll see what Matusic's projecting it to be. And I actually think that's pretty accurate, especially if the Greens are taking a large stance in Australia, this number will probably be even higher. So that number's probably realistic. Even with the coalition in power as well, it's still fairly high. So the major parties aren't really showing themselves in gold in terms of immigration here at all. Definitely not. Another thing, extremely poor policy. So I don't know if many people know about the history of taxation, but realistically, Australia wasn't really a place that was taxed highly until post-World War II, and it's only gone up since then. So you can see of the GDP really here, the total, should I say, government-funded GDP or what's actually coming out of taxation funds so much of the GDP, it's not even funny here. So you'll see here before World War II, it was around anywhere from about 5 to about 15%, right? Now, in my opinion, 15% should be the absolute maximum that it should be, and it's simply because what happens here really is private businesses, what they do is they actually create jobs and create actual, should I say, productivity. Government doesn't. The government spends your GDP. That's the issue. So this needs to go down, but it's going up. And so this only goes to 2006 and 7. I'll tell you right now, that number's above 40 now. And if we get the spending and all the government servants that I think were promised and might actually go on in our actual politics at the moment, you'll see this number even sweltered even more. So that's very poor policy, but it tends to be what our government tends to do. Let's get further into this. We have even worse financial management. So you'll see here now, to give everyone an idea, the two key things that are most important for, should I say, a country to do well financially are, number one is GDP per capita, and probably even more important, as importantly, would be the productivity in each person. Because if you're not producing very much, it's very hard to justify paying people more, and it's very hard to actually produce more in a total GDP sort of sense in terms of the country. So that's another thing. So if you look here, pretty much since I'd say the mid-2000s, we've been on an absolute slide down in terms of labour productivity and real GDP per capita, whereas the immigration rate has seemed to always go up, which is just insanity. That just makes no sense. But I'm not talking about the immigration rate here anyway. I'm just getting carried away because I don't like it. But those two actual, should I say, line graphs of real GDP per capita and the labour productivity are terrible for the country. So that's just another thing that we don't really need in our country. Furthermore, this is a financial system thing. The last thing I'll get onto in terms of what's actually really going on in the market and what should I say, is really driving the growth. And that is a system that is completely dependent on debt. So no one would argue with me these days if I was to say that to buy a house, you need to go and get a mortgage. Everyone has to do that. It's pretty much a known fact these days, so no one's going to argue with me on that. But realistically, the asset prices are so high and the amount of money printing is so high that all they can do is print more and more money and make it more and more favorable to people to get in the market to make it easy, which then pushes prices up even further. So what's happening here is you can see here, would you take on a 40-year mortgage? 1 in 3 Aussies would, but it could cost big time. So there are lenders these days that are already offering 40-year mortgages, and a lot of the big four are talking about it too, and they probably will very shortly as well. So that's what's actually going on, and that is not a great thing for the country, but I'm telling you right now, it is going to become more of a thing, and that's why prices are continuing to go up and up and up, because there's no control on the money supply, which is fundamentally what you need for prices to not increase more, and also immigration as well. You just need that to go to be up 50 to 100,000. But anyway, that's another topic. But the system is almost entirely dependent on debt at the moment. Right, let's get into where the main crux of what I wanted to talk about today, and that's where house prices will be in 2043. Now, this is the Aussie Home Loans 25-year report done in 2018. So it's house prices 25 years from now, and it was extrapolated assuming each city did the exact same as it had already done. So you can see Sydney here at nearly 6.35 million, Perth 2.48, Melbourne at 5.28, Hobart at 2.2, Darwin at 2.283, Canberra at 2.923, Brisbane at 2.237, and Adelaide at 1.196. Now, these statistics, I think, will be fairly accurate, though I think you'll find Brisbane will do significantly better. I've done a lot of research on this, and especially with the demographics, I'm telling you, Brisbane will do better than this 100%. But look at these prices. I know it sounds unbelievable, but do I think this is realistic? Yes, I do. There were people saying in the 90s that Point Piper can't be possibly more than $1 million, and it was, because incomes won't keep up. But Point Piper's now nearly $20 million, and that's nowhere near income values. And Sydney is like, look, they say Sydney is 1.6 to 1.7 million. I'm telling you, to live in a good suburb of Sydney, it's $2 million. That's just being realistic. So that's where we're at today. That is still, 18 years away. So that's very realistic today in terms of Sydney. What might make Sydney, Melbourne, Brisbane, and mainly these capitals not hit that mark, though, would be if they expand the boundaries of Sydney and Melbourne. So I know Melbourne recently included Melton in its actual boundary. So if you start to include more areas, that number won't be as high. But I'm telling you, the genuine city metropolitan metropolis area will be this price in the future. It's definitely, I'd say, well considerable. Now, look, I'm going to go into two final parts here of this, and this is going to blow people's minds away, but this is extrapolating what these areas have done. And I'm talking about metro areas as well. I'm not talking about when you add in 5 different areas, like you add in the Blue Mountains, the Central Coast, you add to Sydney, you add in, for example, should I say, the Melton area to Melbourne, you add in Cranbourne and all the way out to Hastings. For Melbourne, you add in, for example, Mandurah to Perth and Bustleton to Perth, or you add in, for example, Logan to Brisbane. That's not Brisbane. I'm talking about the urban city area kind of the city. Now, this is in 2075, and this is the predicted prices I've got, assuming similar growth, which I do think will actually happen, which is crazy. Sydney, 64.768 million, Melbourne 54.987 million, Brisbane 31.578 million, Adelaide 16.34 million, Canberra 19.183 million, Perth 21.816 million, Hobart 15.989 million, and Darwin 9.805 million. So, you can imagine this, if the things that would have to change would be monumental for this not to happen. And it sounds crazy, but wait till I get into the next one, and that's 2100. So the reason I've done this is I've done 50 years from today, then I've done 75 years from today. And in 2100, these prices are going to be almost unthinkable. And I'm telling you right now, if our system does not change in terms of money printing and inflation money printing, continuous borrowing and all this kind of thing, and us just continuing to do what we do and vote for these idiotic establishment parties, this is what's going to continue to happen. So these are the prices you're going to see in 2100 if we continue to do what we're doing today. Sydney, 404 million, Melbourne, 394 million, Brisbane, 179 million, Adelaide, 68 million, Canberra, 82 million, Perth, 110 million, Hobart, 77 million, and Darwin, 40 million. Now, I know it's not the most, should I say, positive sort of thing to say, but realistically, if we continue to print money and we vote these parties in, this will happen. I'm telling you, it's undoubtable, unquestionable, will happen. You'll be buying in 2100 probably like a Big Mac for like $50 or something like that. Something probably around that mark, or maybe even $100 would be something like that. Your grocery bill will be probably $2,000 a week. That's just being realistic. A grocery order today, for example, is, look, for a family of probably 4, it's probably $350 to $400 a week, realistically. I remember my grandparents saying in the 70s, which is only about 55 years ago, it would cost about $18 to $20 for a whole cart of groceries. So that's already itself done similar numbers in the last 55 years, and this is in more years in the future. So it's completely realistic to think that will happen if it continues. Anyway, to finish off this episode, I just want to discuss one final thing, because a lot of people are going to question whether this is even possible or not, and that is what's happened in the past and what's going to happen in the future. So if we go right back to 1951, basically and during the war, and actually slightly after as well, there was a thing called price controls on the market. So once that got removed, it changed the market in one instance. So prices really started to tick up. But then obviously, as I previously discussed, in the early 70s, you had the dollar off the gold standard. So that made it even worse. So when we look at the average capital city price in 1951, just as the price controls were changed, the average house was only $7,150 at that time. At the moment now, and I know I have some data that says differently, but this is the most recent CoreLogic data taken off our CoreLogic site. The average Australian capital city house price now is $1,190,000. So if you do that over the 74 years that it's been, the rough growth of that is roughly 7.1%. So if we go back to the previous examples of, the 2043 capital city prices, your 2075 capital city price, and then the crazy 2100 capital city prices. As I said, if things don't change, this is completely realistic to happen. Completely. It sounds ungodly and insane, but it's completely realistic if things don't change. So look, for those who are watching this episode and they think it's a bad thing, look, maybe on the large scope, it's probably not the best thing for the average working class person. But if you want to be something different and really set up your financial future with what I've shown you today, it's really the time to take action now, because do you really want to wait and see, for example, from heaven or whatever you believe in, for example, your grandkids and great grandkids not being able to ever afford a home and not even be able to afford a rent home and living on the street if prices continue to do what they do? So it's definitely time to actually take control of your financial future. Now, I thank everyone for watching this video, but if you are really serious about getting a good investment that will outperform the average of the general Australian market, I'm definitely the person to reach out to. And you can do that via www.compoundinvest.com.au. Look, I can help people right down to about a $500,000 purchase price, and I have clients who purchase above $10 million as well. So it's definitely something that's achievable for a lot of people. But again, thanks everyone for watching, and I'll see you on the next one.